What's up traders, welcome to Failure to Displace, and in this video we're going to take a look at this morning's London session on EURUSD, where I was able to profit from this 3R trade. Rather lucky trade, so we'll go into the analysis and see how this setup played out and why I was very fortunate not to get stopped out on this pullback. Let's jump into the analysis now. Here we are on our 15-minute chart, as always. To start the analysis, we're going to be using the session liquidity tracker to show us untapped levels of session liquidity. These are these extended green lines. Links to all of the indicators that I use are down in the description below, along with a link to a video that explains the various settings. So if you'd like to mimic my chart setup, go ahead and check that out after this analysis. We can see that yesterday we had a rather bearish day. So the trend has been very bearish over recent weeks. It's just continued lower on EURUSD. Price essentially melted in the New York AM session yesterday, and in the PM session consolidated, with Asia just taking out the low, making a run for New York AM session low, but without actually taking it out. So as we come into our London session, we can see we've got untapped liquidity both above in the form of these two relatively close highs, and likewise the same below us. So we're very neutral coming into this. We are currently leaving 15-minute bullish fair value gaps. So price action does seem to be bullish before the session starts, but I'm not overly fussed either way. I'm going to be looking for a reaction as we sweep liquidity here, and so I'm definitely not going to be looking to get into a trade in the middle of this tight range. So I'm not going to mark anything out here. We are essentially just going to go onto a lower time frame now and wait for one of these levels of liquidity to get swept before we start looking for a potential entry. There's no news on the calendar this morning, so we've got a clean run as far as price action goes. So our London session is starting at 1 AM. So this is the open of a new 4-hour candle where we can potentially get a large injection of volume as the new candles open up. So that's why we're monitoring from 1 AM, and we'll start scrolling through price action now. So London opens with a bit of a bearish move. So we're essentially retracing this pullback here into the Asia range. We're leaving displacement below, so we've got a bearish move straight on in the first half hour or so of London. So eyes are looking at the Asia low and yesterday's low as well, in the form of New York AM session. So we've respected this 5-minute fair value gap. As prices come up here, we've got this 5-minute breaker for potential resistance. Big engulfing candle on the 5-minute. Price is coming lower. We've swept Asia low now, so we can be on the lookout for a potential reversal trade at this point. So I'm going to drop onto the 1-minute time frame. Look for a potential entry. So currently our break of structure, we're going to be looking for an ICT 2022 model because we've swept a higher time frame level of liquidity in the form of Asia low. So we want a 2022 model reversal now, which is going to be a break of structure with displacement and then an entry within a fair value gap inside that displacement leg. We've got some buy side liquidity here. This would actually be our break of structure at the moment. So we would need price to come up and take this liquidity, leaving displacement if we want a 2022 model entry. We do still have the untapped previous daily low here. So because we're very close to that, it would be very nice to take that out before we start looking for long positions. Now we'll come down very aggressively. So my eyes are looking at really a 3 AM trade here. Start of a new 15-minute or a new hourly cycle. So yeah, we've teased the previous daily low. This is definitely inducement, so we don't want to be taking any longs here while we're so close to taking out this lows. So I won't be jumping into a trade until we've physically swept that previous day low. So we're coming into the new hour, 3 AM. We have swept the low. So our break of structure now is this swing high here. So this is the last swing high before we create the new low. So we've got a lower high to the left, lower high to the right. Obviously we're displacing lower now, as well. So we've left a big fair value gap and a volume imbalance here. So this gap here between the two candles is a volume imbalance. We've got a new swing high here. So this is our new break of structure. Again, lower high to the left, lower high to the right with a new low. So we've got a nice rejection candle, 302. So the start of the new hourly candle. Price has come up, we've left a fair value gap. We've got this large candle here that's just breaking structure. This potentially could create a breaker block at this point. The last two up-closed candles that create the swing high before we create a new swing low are classed as a breaker block, and we've got a fair value gap within that area. So this is what I was looking at when I took my initial trade. I was expecting this to act as the breaker. We've taken the high with a break of structure, but we've not closed above it. So I was a little bit keen to get in on price action here. We left this large fair value gap, so we've closed above. So my initial entry was to take a long position off the top of this breaker, stop loss below the low by a couple of points as usual, and then targeting. Well, first of all, I was taking 50% off at 1-to-1. So obviously we're in very, very bearish price action over recent weeks. So this is a counter trend trade. So I want to make myself risk-free as quickly as possible. There's a video, I'll link it up in the top corner here for you, explaining the theory behind taking 50% of the trade off at 1-to-1 to make myself risk-free, but allow myself to leave the stop loss here so the trade has room to breathe if it's going to run. So the plan is to take 50% off at 1-to-1 and then run the rest. What my eyes are drawn to is we've got these relative equal highs here. We've got this kind of trend line liquidity that's being built at this point. But inside here, we've got this balanced price range. Is what I was looking at. And obviously we have the breaker that I initially identified as we started the analysis above us. So my aim is to close 50% 1-to-1 and then run this into this balanced price range because we are bearish. So this BPR may repel price and will continue lower. That would bag me a really nice 3R trade anyway, so that I would be more than happy with that. So that's the plan for the entry. We've had a break of structure, we've left the fair value gap. This is our breaker block. This should have acted as resistance, so price should have come into this and then continued lower. This has failed, so it should now act as support for price to continue higher. Time-wise, we're at 3:07, so we are in the middle of a 15-minute cycle now. So take note of that when I'm getting this entry. So we do get tagged in 3:08. Price pulls back aggressively. So what I was looking at this point, this fair value gap has failed. So it's turned into an inversion fair value gap. Could be resistance. We do have this long wick here. So I was hoping, I do treat long wicks as fair value gaps, that potentially 50% of this wick would get respected. Time 3:11. Expected to get stopped out at this point. Price comes lower, creates relative equal lows. Comes a tiny bit lower, so just missing my stop loss. We have taken the swing low. So this is why I give myself a few points extra on stop losses, so that price can do this. The idea may still be valid. And in this situation, I was very lucky. We can see 3:15. This is the actual entry. So I was too aggressive in getting in. My entry was in the middle of a 15-minute candle. And you'll know from previous videos that I do like to get in at the start of 15-minute cycles. So really, I should have been more patient, waited for the 15-minute candle to come. We've created these relative equal lows. At this point, I haven't been stopped out, so I'm still in this trade. Price comes higher and aggressively takes the swing high here. So one of the key things in any trade is actually watching for displacement. That should be the #1 trigger before we enter. And we can see here, I haven't got displacement Yes, I've identified a potential breaker block, but would you class this candle as displacement? Look at the size of the bearish candles coming down. These bullish candles aren't any bigger than the bearish candles. So this for me actually, in hindsight, isn't displacement. It's not an obvious buy signal. We can't obviously see that the big players have got in and are buying this up. Contrast that to this. This move here has engulfed all of these bearish candles very quickly. 1, 2, 3 into the start of a new 15-minute candle. So this is displacement for me. We've left a big bullish fair value gap. Another big bullish fair value gap. This is the actual breaker here. So in hindsight, the better trade would have been waiting for the start of the new 15-minute candle, seeing displacement aggressively above this high. This is now the breaker. We've got a fair value gap within a breaker, similar to what we've got here, but we've got displacement on this leg in a new 15-minute candle. We can see the volume coming in on the new 15-minute candle. So this would have been a better entry at the top of this breaker. However, I am still in the trade. So my stop loss trade management played out by leaving a little bit of breathing space below the swing low. So that did work out. Price does tap the top of this breaker. So if you were entering here, the more sensible entry, you are now in the trade. Effectively having zero drawdown, prices rocketing away. I'm now risk-free because we have cleared 1-to-1. At that point, I've taken 50% of the trade off here. I'm now leaving this to run to hit my target, which it does do aggressively. And there's the take profit for a lovely just over 3R into this balanced price range. As I mentioned, this entry was the better entry, which would have been start of the 15-minute candle, top of the breaker block is your entry point, which you get tagged in. There is literally zero drawdown, so this is totally stress-free. And then again, you can run this up to the BPR for essentially a 2R trade. Risk-free, no problem. Look at maybe taking out that swing high because we could take that. I mean, when you're seeing this kind of price action, you would maybe be more comfortable in holding this longer. Price continues. Slight pullback off the BPR, so that's why I like to take profit. Took note of that. However, it does continue taking out this high, so this would bag you your 2R on the more optimal entry. And then prices continued higher into the breaker block, taking out the session high if you were holding runners. For either a 2.86R or on my entry, if I was braver and didn't suffer such drawdown, I really did think that this was a loser. In fact, I got to this point and I just walked away from the screen. So I was very happy when I came back and I'd actually hit both my take profits. We could have bagged 4.7R by taking out the current session high, and we've actually taken out the Asia high as well. And we'll see where we are up to current price. Just consolidating at the top of the range now. It's a really solid trade. 2 lessons at this point. Didn't follow my plan waiting for the 15-minute cycle, so I got in too early halfway through a 15-minute candle. Subsequently had to endure quite a lot of drawdown, expecting to get stopped out. The bonuses that I've got there is that my trade management was good by leaving some breathing space below the swing low. So this did give me just that room for price to pull back and then accelerate away. And this is just confirmation that waiting for the new 15-minute cycles is always worthwhile, so don't get sucked into trades too early. The first trade was a false move, we pulled back. The new 15-minute cycle was the actual move where we would have had a brilliant entry on a breaker block. So I hope you found that useful. Really clean price action this morning. If you got in at the right time, zero drawdown, fantastic trade. I hope you found the analysis very useful. It's good for me to come back and look at this in hindsight because I can see what I could have done better there. Immediately saw my mistake. If you liked the video, leave it a thumbs up. If you have any questions, then leave them down in the comment section below. And if you're enjoying the content, please don't forget to subscribe. Dropping videos like this every single day. The channel's seen some fantastic growth and it would be amazing to have you on board. Thanks for watching, and I'll see you again in the next video.